Namaskar, hello and welcome to the Banker Se Charcha, BFSI and Economy podcast with Ashiesh Kapoor. In today's episode, we chat with one of India's foremost senior economists about the story of Bharat's economic growth in the post-COVID era thus far and what the future beckons. It is my absolute pleasure and privilege to host Shri Sanjeev Sanyal, member of the Economic Advisory Council to the Prime Minister and Secretary to the Government of India. Among several key responsibilities, he served as the principal economic advisor to the finance minister for 5 years up till February 22, besides co-authoring and editing 6 economic surveys of the GOI between 2017 and 2022. In addition, Mr. Sanyal is a prolific writer, having published hundreds of articles and columns in leading national and international publications. He's a keen historian. He has authored multiple best-selling books, and prior to joining the government, he spent over 2 decades in financial markets, wearing many hats in multinational banks, including being Deutsche Bank's chief economist for South and Southeast Asia, and later the global strategist and managing director at DB, Deutsche Bank. Welcome to the Banker Se Charcha, Sanjeev, and delighted to have you on the podcast, sir.
It's a pleasure to be on your show.
Thank you so much. Let's dive straight into the discussion topic of today. Now, the COVID-19 pandemic, sir, and the resultant shutdown globally created shockwaves with disruptions in supply chain and livelihoods across the world. Could you share your perspective on the severity of the pandemic impact with respect to the Indian economy? And what were the key elements of our Bharat's differentiated strategy response vis-a-vis the developed West that has stood us in good stead and worked out well for us?
I think, it takes no great imagination to know that COVID was a major shock for both the world economy and ourselves. When you lock down 1.4 billion people, in fact, I should take the whole world's population because eventually everybody ended up locking themselves down. So there's an obvious shock to the world economy, which we all went through. So it's a recent past. I don't have to explain it. However, the responses of different governments were somewhat different. There's a big range of them. But we in India took a somewhat different approach than others. First of all, in the very beginning, you will remember, there was absolute lack of clarity on what was actually happening. So this is something you should understand. The complete uncertainty that prevailed at that time. We didn't know what exactly was happening, what was the nature of the disease. You will remember there were these reports of something bad had happened in China. Then a little bit later, we heard that that had spread to Italy. The WHO wouldn't give us clear answers. We didn't know who it was impacting, and all kinds of things were going on. So that is the context in which we decided to, or I think it was the 20th of March of 2020, that we decided to do a lockdown. Now, why did we do a lockdown? Well, the first and most important thing is basically because we didn't know what was happening. I mean, for example, we had no idea why it had spread. We didn't know if it affected small children. I mean, one of the big fears in the beginning is that it would wipe out younger people, which is, as you can imagine, somewhat scary prospect. There were some who were making the case. There were some experts who were making the case it was just a bad flu. But then there were others, if you'll remember, who were saying that hundreds of millions of people would be dead around the world and so on. So now, how do you respond when the so-called experts are not telling you anything, right? So the lockdown is basically done to buy us time to figure out what is going on. So that is the first and important thing you need to understand, that we had no idea. We therefore had to assume the worst case scenario. So after all, there was no point in doing a lockdown after it had gone and killed lots of people, right? So you had to do it upfront, slow it down, buy ourselves time. Also, it buys us time to begin to do things like quarantining. But it gives us time to do some sort of a kit for doing testing and all that. Remember, nothing is there in the beginning. So as we began to do that, obviously we knew that when you do something like a lockdown, the impact on the economy is immense. I mean, you're shutting the system down, right? So be under no illusions that we were unaware of what this meant. And we were willing to take the risk because of the health shock. So the thing that many other countries did is they decided at some point that this is the path they are going to take, i.e., you'll remember there was, of course, the Swedish model who decided to keep things open. There was the British model, which was, let there be herd immunity. Then they changed their mind afterwards. China did something else, zero tolerance. We, on the other hand, did not do this. Our strategy was that we did not know. So ours was all based on iteratively making our way into the future. And what it meant was, on one hand, we bought ourselves time in various ways. First with the lockdown for the health side, and then later on for the economy by giving out, free food to the very poor as a safety net. Similarly, for the business sector, we said that okay, MSMEs, we are going to backstop the payments on the system, because one of the big fears in this is that you have massive defaults, waves of default. One bunch goes defaults, then it feeds through to the other bunch, and eventually the entire financial system. So basically, the first thing we had to do was to create a backstop of some sort of a safety net. And you'll remember the government basically guaranteed payments of the whole system, right? The same thing we did, we provided small amounts of money to the very poor through the Jan Dhan, but basically created a safety net. And then once we had created some buffer in the system, we then iterated our way forward. So you will remember the finance minister came repeatedly over, and would keep announcing changes. And of course, there were people who criticized her at that time. So, how come we are having a mini budget every few weeks? Well, that's exactly what you need to do when you have a situation that is changing. You adapt to it. The alternative, which is what some other countries did, was basically they decided what was happening, gave the false impression of confidence, but then they went and blew up their budgets in these gigantic spending programs, monetary and fiscal efforts. Now, we were far more circumspect, far more restrained in our monetary and fiscal effort. In fact, the whole idea was based on much more targeting. We try and target the people who really need it, time it by iteration, and basically do not do unnecessarily too much and use up all your ammo. So the point I'm making to you is our approach was a very different one. It was iterative. Right. It was based on safety nets. We at that time, we remember we called it the Barbell Strategy. So on one hand, you sort of safety net against the very worst case outcome, and the other side, you iterate your way forward into the darkness. So all of this is something that we did. Now, of course, doesn't mean that we were not hurt. Of course, there were waves of COVID. We were hit by many shocks, but through it all, we kept at it. Iteratively, we got a vaccination program going. We eventually vaccinated a billion people twice. And then we also did the same thing with the economy. As we came out of that, we were willing to, reflate the economy. Once we had opened the economy, that's when we attempted to reflate it. So even at that time, if you go back to the COVID period, we were telling other governments that don't press the accelerator when you've got your foot on the brake. Okay, so we actually warned other people not to use up their fiscal and monetary space so aggressively when they also had the foot on the brake. So it's only when it opened, we decided to begin spending. And even there, we directly spent on creating assets, which is on infrastructure. Right. Because if you go back and listen to me at that time, you will hear that I was saying that, look, we are running up debts to do this. So it is important we leave behind for future generations assets to match those liabilities. So Absolutely. All of this meant that we had a particular different way of dealing with COVID. And I think 3 years later, we can claim that we did a decent job.
Absolutely. This was once in a century crisis. And the way, if you look at hindsight, it was, handled superbly, from the administrative point of view. Now, one thing you indicated just now as well, and indicated in the past, Sanjeev, is that while India has come out stronger after the COVID crisis, it doesn't warrant forcefully, pushing domestic demand or growth accelerator, as you call it, through excessive stimuli. And instead, the focus should be on maintaining macroeconomic stability and ironing out the remainder supply side constraints. with the strong first half FY24 performance indeed reflecting that many of these constraints have been tackled well. Could you detail some of the granular policy and administrative steps taken that have helped kind of energize our economic momentum? I recollect the initial forecast last year, for FY24, GDP growth was at 6% levels. The economic survey conservatively said 6.5. Initial RBI estimates also was 6.4, and then they enhanced it to 7. So please talk us through some of these measures that have created this framework for 7% growth levels.
So the first thing you need to understand about our economic thinking is that we are macroeconomic conservatives. So, and at the same time, and it's linked, we are not only macroeconomic conservatives, we are also unapologetic supply siders. So while we understand that Keynesian demand creation can be used to tilt against cycles, we think that that is to be used in moderation, and that the real game is the supply side. So from the stability perspective, first of all, let me say that this government has done the following thing. One is this government introduced the inflation targeting framework. Historically, India is a country that had inflation in the 8 to 12% range. Now it has come into this 2 to 6% range. So it's a very significant reduction in the sort of the baseline inflation that India had. This over time also allows cost of capital, etc., to come down. Similarly, we have been very conservative about the banking system. We have spent a lot of effort and some pain in the years 17, 18, 19, cleaning it up. And despite the COVID shock, the NPA ratios have come down. And again, using the insolvency and bankruptcy code and so on to clean up the banking system. And thank God we did it, because if we had gone into the COVID shock with the banking system we had in 2015-16, our banking system have gone through meltdown. I mean, even the US is still dealing with banking problems as a legacy. So the fact that we cleaned up our banking system, another solid thing. Third, we keep accumulating foreign exchange reserves. Now we have something like 620 billion worth of foreign exchange reserves, and we have been very conservative about using them. You'll occasionally hear some commentators saying, "Oh my God, we should utilize this for building infrastructure, etc." This is not the correct way to think about it. These are external liquid assets. They should be kept as external liquid assets, and we have been quite conservative about that as well. So you notice at every step, we have been trying to keep the macroeconomics well anchored. Now, while we are doing this, we are also trying to help growth, but that is not done through pumping out monetary or fiscal levers, but basically by using supply side improvement. So, for example, in the last many years, we have done GST, insolvency and bankruptcy as well, cleaning up of banks, but also even at the height of COVID, we were liberalizing sectors like drones, space, the geospatial sector, doing a large number of process reforms. Again, people don't realize this, all these nuts and bolts, just making the processes better, shutting down autonomous bodies of the government that have outlived their importance. So all of this was done continuously, and the cumulative effect of that is what you're seeing feeding through to the fact that we are now doing 7% GDP growth rate. But do remember that this 7% GDP growth rate is being achieved without any help from external demand. The rest of the world is not in great shape. The global trade is slowed down. Our own exports are holding up, but they aren't expanding fast. So in that environment, we are doing 7% GDP growth. Now, somebody may say, can you grow faster? I would say, look, my machine can grow faster. This economy that we have created through all these reforms is easily capable of doing 8% growth. But I would caution against trying to artificially make it grow at 8, 9% growth, because if we did it under current circumstances, all that we would achieve is that you would end up with demand growing in India too fast, sucking in imports, and we having a problem with our current account. So, we want our trade account and our current account to remain well and well managed.
Right.
And if the global situation is such that we can do 7%, we will do 7%. I'm not going to force the pace. There will be a time when the rest of the world will be cutting rates and the growth will be growing and accelerating. At that point, we will do 8%, 9%.
Hmm. Sure. No, as you rightly said, some of the external headwinds seem to have eased a bit. For instance, oil prices have also declined from the nearly US $100 a barrel highs, leading to lower imported inflation. US Treasuries have corrected a bit. That has somewhat restored the interest rate differential as well, and FPI inflows are also picking up steam. Although geopolitical worries and exports, as you mentioned, have been impacted because of that. As far as macro is concerned, I think the picture looks solid as well, be it forex currency reserves you mentioned, inflation, narrowing current account deficits, and even industry capacity utilizations have improved, albeit a few concerns linger like the slow farm and rural demand recovery. Could you give us a sense about how do we go about tackling the rural consumption demand piece to sort of further cement the post-COVID overall growth momentum of the economy?
So one important thing I want you to understand, not just rural, but urban as well, overall consumption is not going to grow as fast as overall growth. The model of supply side growth is based on investment driving growth, not consumption. You cannot do both. If consumption and investment growth grow together, that means that savings is falling, right? If consumption is growing, savings is falling by definition, right? Arithmetic. So in that environment, you will not be able to sustain investment driven growth. So you have to understand that we have a particular model, and that particular model means that consumption will actually, ironically, lag a little bit behind the economy. So again, going back to the point, we are not going to pump demand. What we do want is that enough of this growth filters into rural areas and into the interiors, even urban areas of, for example, East India, which are slower growing, and generates incomes and jobs. That is our interest. So that requires that large scale infrastructure is built in those parts of the country. And for the first time, you're seeing serious infrastructure build out in Northeast. You're seeing serious infrastructure being built out in places like Eastern UP. And the idea is that that creates jobs, it creates its own dynamics. This is not about artificially pumping consumption and demand. I'm repeating this over and over again because this is unfortunately the default of a certain older generation of economists. And we are repeatedly saying that that is not our model. We are an investment driven model. The government, of course, has to do its own part, but the private sector has to do its own part in investing, and it is doing. We can see now clearly, acceleration of private investment. We are also seeing decent inflow of FDI as well. So there is good investment momentum in the system, and we need to sustain this now over many years.
Right. No, well said. Just going on a different note, the Indian economy has come a long way since liberalization in the 1990s, and many relaxations in capital controls and foreign flows have also been initiated by the government and monetary authorities over the last many years. Donning your hat as one of India's premier economists, could you provide a perspective on full capital account convertibility, CAC? How do you view it? And two, is the post-pandemic Indian economy equipped to embrace convertibility in toto?
So first of all, I think our capital accounts are, for all practical purpose, open. And what we do, in fact, the way we have anchored systems is by anchoring our monetary policy to an inflation target. So our management of the capital account, the impossible trinity, which economists talk about, the link between interest rates and monetary policy on one side, the current account on the and capital account convertibility on the second side, and exchange rate on the third. So the links between the three, by and large, are now anchored not on capital convertibility, but on monetary policy. Okay. So for all practical purposes, we have fair amount of fluidity on capital account. Having said that, our immediate interest is not so much capital account convertibility, which is anyway reasonably open. Our more direct interest is hardening of the Indian rupee.
Right.
So what we want to do is to make the rupee more widely used for external trade, investment, and other things. And so now I want to make it clear that this is not about de-dollarization or anything. That's a different debate and discussion. We are not trying to replace the dollar as an anchor currency. That's not a feasible thing at this point in time anyway. What we want is that by 2030, the rupee becomes a hard currency like any other hard currency. And there are many of them. There is, the euro, the yen, the British pound, the Singapore dollar. We will be one more hard currency. Maybe we will also get included into the IMF's SDR basket and so on. And so what we are doing is encouraging the use of the rupee for denomination of our trade, for use in various in other countries. We are trying simultaneously to encourage the use of the UPI in other countries, the messaging system called SFMS as an alternative to SWIFT, and so on. All of this is relating to hardening up our currency as an international currency, and that is really our focus.
So yeah, converting rupee from an exotic currency to hard currency, all of us are looking forward to that as well. And the day I'm sure is near. All right. The pre-budget review of the Indian economy also outlines the India's potential to become a USD 7 trillion economy by 2030. What, in your considered opinion, could be the next focus areas in our economic reforms journey to achieve sustained 7 or higher, growth levels over the next decade? Perhaps in terms of making logistics and product prices more competitive, or say unleashing full potential of climate mitigation capex across renewables and related sectors, or even leveraging new climate adaptation outlays to drive growth.
So first of all, let me make it clear that this target of $5 trillion and later on $7 trillion, this is all predicated on nominal GDP growth rate. Many people confuse this. I want to make this clear because you wouldn't manage to do it with 7% GDP growth rate. This is a nominal target, which you have to then look at nominal GDP growth, which in India is running at about 11%. So I want that to be clear. That's only with that compounding. Now, once you compound that, you see, we will in about 18 months' time go past Germany as the world's fourth largest economy. And another 18 months from there, bypass Japan as to become the world's third largest economy in US dollar terms. We already are the third largest in PPP terms. Now, I'm not saying that we have solved all our problems at that point. In fact, we will still be a very poor country because we may be the world's third largest economy, but in per capita terms, we will be still quite poor. We have the world's largest population, as you know. But nonetheless, let me say that an important part of this, as I said right in the beginning, is maintain macro stability, keep up with this investment-driven growth model, make sure that ease of doing business is something that we focus on, encourage certain anchor industries through PLI schemes and other things. So make sure that we get some chip manufacturing in India, certain anchor companies like Apple is already here, perhaps Tesla will also come, and so on. So get some anchor companies, become a part of the global supply chain. So an important emphasis is on manufacturing. Now, there are other economists like Raghu who don't approve of this use of manufacturing as a means. Whereas I would say that, look, an economy like ours needs multiple engines to function, and manufacturing has to be one of them. I also think simultaneously we need to we keep up with our being at the cutting edge of the services. Fact is, this is an area where we do have strength, and we do need to keep up doing reforms. We have done a whole bunch of reforms in recent past to allow for our services sector to be globally competitive. I mentioned earlier, opening up our geo mapping sector, our drones sector, and so on, space sector. And so these are sectors where we will keep, trying to maintain our competitiveness and build on it. Similarly, there are new sectors like artificial intelligence and so on, where we should embrace these things. And so I am not of the view that we do need to regulate them, but I don't think we should be afraid of them. And then there are more mundane sectors like tourism, which we barely are, making use of. So there are a whole bunch of sectors across the spectrum that we need to build on. And all of this requires that we are at it in terms of creating infrastructure, easing various licensing and other permits and other things that restrict expansion, encourage new businesses to come in. And as I said, keep this ball rolling for next 25 years.
Absolutely. Great. It was a fantastic conversation. Thank you, Mr. Sanyal, for sharing your deep insights on the many nuances of India's economic growth in the post-COVID era, and the key areas of focus, as you mentioned, are required to sustain this growth momentum well into the future for the next 25 years and beyond. Thank you so much.
Thank you.
That'll be all for today, ladies and gentlemen. Thanks for watching, and do subscribe for more insights into the fascinating BFSI world of banking, finance, markets, and economy. I'm Ashiesh Kapoor signing off on Banker Se Charcha. Until next time, namaskar, thank you, and Jai Hind.